Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look in the gold market. So here we have even less changes compared to euro currency. There we have at least some started downside action, while in the gold market price mostly stands flat. But at the same time, if we take a look at lower time frames, there might be something that could trigger the retracement. So actually we have tried yesterday to find the patterns that might be the background for that, some starting points. But this pattern that we discussed yesterday has not been formed. So it has been cancelled by the price action, and we have to start right from the beginning, trying to see what will happen and actually expecting some clear pattern that could trigger the pullback on the gold market as well. As I explained today in the euro currency video, I wouldn't say that recent statement from the Jerome Powell was absolutely dovish and bad for the dollar. It's not quite so. It's because despite that they have cut the forecast for the gross domestic product, they denied to use the rate cut tool in trying to find the liquidity in some other sources. For example, they reduced the quantitative tightening for the 20 billions per month. This is a significant change in the quantitative tightening. Second is they have increased in the forecast for inflation, which is in combination of the lower gross domestic product might be the first sign of the recession, or that will go in the way of the stagflation because inflation forecasts have been increased. All this taken together brings some not quite dovish picture for the dollar. Investors maybe haven't made the final decision yet, but I'm sure that after the weekend, when they will understand and read all the statement, understand what the consequences might be, this sentiment on the market could increase. I mean that the Fed statement not quite dovish for the dollar. Meantime, what we could do in current situation? So here's a very similar situation as on the euro. Those who would like to take investing long positions on the gold have to wait, because currently we stand at the overextended levels on silver bond on the market, and also market still stands around major 30-40 target. There's no reaction yet has happened. This market is just preparing to show you how reliable this reaction will be. Whether it will be formed, we will see. But at this point, overall background suggests that probability stands for us in favor of the waiting for the pullback. All other scenarios suggest higher risks, and well, doesn't let us to do this. So on a lower time frame, what do we have? 4 time frame chart, market still stands around the same pattern. The background with the engulfing, as you could see, has not been formed, it has been cancelled with this upward continuation. And take a look, market right now, after this type of the probable appearing of the hand shoulders attempt to make it, upward action has happened. Now what we intend to do, we will be watching for the same pattern but on the larger scale. Once again, it will be the hand shoulders, left shoulder, head, maybe right shoulder will be formed. Take a look that recently gold market is forming too many head and shoulders patterns. That was minor on the 30-minute chart. So you can see when top of the right arm has been formed, retracement hasn't reached the neckline, downside action has not reached the neckline, market immediately turns up. The same has happened in the beginning of the week. Recall what we talked about this pattern as well. It also has not been triggered, so market was forming the shoulder, then immediately turns the direction, move above it, and that would cancel the hand shoulders. And this is not only on the 30-minute chart. It happens everywhere. So on the daily chart, for example, just move slightly to the left. The same story, hand shoulders, attempt to make the shoulder stop, not reaching the neckline, and reversal. So this might be repeated again here on a hourly chart. Currently, unfortunately, we do not have any big patterns, say on a weekly chart, on a daily. That's why for a while we have to use the patterns that might be formed on intraday charts. But if we will see the same picture and market will start failing to form the hand shoulders, or it will form the right arm, then suddenly starts moving up again, that will be the signal for possible taking a long position. If you take a look at the cross-market analysis, I suspect that we could get very soon the combination of the safe haven, running to the safe haven situation, because on the dollar index we see the upper direction. Meantime, the 10-year bonds starts dropping and abandoning the minor retracement target around 4.38, the ABCD that we already talked about. As I explained previously, this happens very rare when the market abandons some targets, especially if they are small. It's turning down too early, which means the demand for the 10-year bond, in general for the United States bonds, together with the rising of the dollar, as you understand, this is clear indication of the running of the safe haven. So investors buying dollars then put them in the bonds on the bond market. So that also could make impact in the gold market. That's why it's because the running in the safe haven will be wide. If it demands for the bonds, it might be also demand for the gold. And from that standpoint of view, the potential failure of the hand shoulders is not less important pattern than the direct hand shoulders. So that's what we intend to keep an eye on market currently. Right at this moment, I do not see a lot of things to do. So taking short is too early because we do not have the pattern in place. Taking the long position is also early because chance of retracement still exists and market stands near the overbought, an important target that has not been respected yet. So that's why we need to wait today, maybe tomorrow, and see what will happen.